All right, let's jump into things. 2nd of July, 18 past 11. So got retail sales for Aussie coming up in just over 10 minutes now, so 12 minutes now. So go through the news a little bit quickly here, and then obviously sort of have a little look at how that's going to sort of impact the markets. Not a great deal sort of through Asia yesterday. We had a bit of data out from Europe, and that again is sort of not really something that I'm sort of overly paying attention to at the moment. And that it's good to keep an idea about what's happening with everyone else. But as you can see, it pretty much just sort of came in flat and as expected. The sort of news that was probably sort of the main sort of one on the docket and that sort of overnight, mainly was the ISM and JOLTS numbers, both which came in. Not too bad. Yeah, as you can see here's final manufacturing 52.9, so that's a little bit of a tick up in expansion. Manufacturing, so I'm not actually sure of the difference of these two between you've got ISM here and the difference between this two and these two here. Expansion. Okay, so I think it's just a bit a broader sort of thing here. So you've got 800 survey of 800 purchasing managers, where this one is a bit more of a sort of defined sort of thing with only 300. But I guess more or less the sort of the same information, just on a broader sort of scale with it all. But that's again, look, it's not shocking kind of thing. Again, you would have liked to have got this one, which is obviously the more detailed with the 300 as a little bit higher, but not too bad. Slightly positive numbers here. But the one that I was looking for, as I mentioned yesterday, was the JOLTS number because what Powell seems to be continuously going on about at the moment is that if we look back at how where the data's at, okay, yes, it warrants a cut, but he's not ruling off, and also he spoke last night, which I'll get to in a moment, but um, the labour market's not too bad, and the economic data's not too bad. So it doesn't if that's not too bad, not too bad, it means that you don't need to cut based on, excuse me, based on those that side of the equation. And then if inflation is, you know, in the way that he views it as a potential to go up, you don't want to preemptively cut if inflation is going to rise through all the tariffs and all that sort of questionable kind of area till you've got a bit of a better idea about what's to come. So you've got the dual mandate. So there's the two sides of it. So inflation, he thinks, is a potential to go up. So he doesn't want to cut on that regard. But he did say that, look, if the labour market warrants it, if the data sort of comes out and, you're seeing sort of, in this case, less job openings, if we got ADP tonight, we got NFP tomorrow, if we see those as sort of weak numbers, then that could supersede the idea of, oh, hold on, wait, we're waiting to see what happens with the inflation. No, it's more sort of like, look, we could wait to see what happens with the inflation, but that is still a question mark as they're waiting to see, is it actually going to be impactful or not? If the labour market starts to die down a little bit and, less jobs, this kind of sort of stuff, then that could supersede the whole question mark over the inflation and could actually bring forward the idea of a cut. And having a little bit of a stronger sort of data here bolstered the sort of the idea that sort of okay, maybe they could hold off for now. Now he had that exactly pretty much at the same time because this, although it's listed at 11:30, and that this by the time sort of they're actually getting around to sort of having the full discussion about the stuff, it's probably about 12:30. But you had all these sort of heads of sort of central banks in that meeting yesterday. And the sort of general sort of consensus of, so I just look at this, it's sort of like your high impact, high impact, high impact, and then sort of Lagarde, medium impact. But basically, the general sort of consensus it seemed with these guys, I mean, they went on about a bunch of things and that sort of, about stable coins and whether they should sort of use that to sort of whether their sort of central banks should use these things, and they don't like basically in little side notes with that one there in that regard they're not a big fan of it because they sort of feel that it's sort of like it takes the control away from them because they want to be able to sort of use the monetary, like when they say, hey, look, we've got, we use the levers at our disposal. That means, monetary policy. It means sort of like, printing money. It means raising rates, these kind of sort of things. And if you have sort of like some, I guess, to even though if it were made to be a government sort of thing, a bit more of a sort of decentralized sort of thing with it all. I guess that goes against the fact, wouldn't it? But anyway, the point is that it takes the control out of their hands a little bit. So I think the general consensus is they're probably a little bit more negative on that kind of side of stuff. But back to what was more important, the tariff kind of sort of talk with it all. General consensus there is it's a feeling of uncertainty from all of these sort of people. And you had that UATA guy sort of speaking as well. He was sort of going on about like that, depending on what um, the US does with the tariffs in regards to, say, Japan when compared to, say, China, when compared to, say, Europe and that, all those factors, it's not just a direct, okay, US to Japan or whichever, whatever. It's not just, okay, the two economies there, so let's base our whole monetary policy off what tariffs America's giving us. You need to then factor that in about what tariffs are being given to the other countries. And so there's so many different moving parts with it all, but the thing is, it's just a big question. And really, sort of, like I've said this a number of times, like, because I'm a Trump fan, but this is just such an absolute debacle. Like like I get the idea, come out fighting, come out, you know, ask for, like you did, 140%. And then you know what? If you bring it back to 30%, hey, look at you, you're the good guy. You brought it down 110% for some ridiculous thing. Make it 5,000%. It doesn't matter. Like once it passes a certain point, it's not feasible anyway. So say, hey, look, it's 10,000 percent tax. It doesn't matter. Nobody's going to buy things at 100% tax either. So anyway, the point is that this whole thing is just a debacle. Nobody seems to know what the hell's going on with it all, and with that uncertainty, I think everybody's leaning more on erring on the side of caution, which is understandable because you don't. Again, this is what Powell's saying. He doesn't know what's going to happen with the tariffs. It could lead to inflation. Some people seem to be very gun ho on the fact of no, it's not going to, and then some people are yes, it is going to, and you know, I think it's one of those sort of things when anybody's telling you exactly what's going to happen, they're kind of lying to themselves and lying to you as well. So anyway, that was just sort of what we sort of saw overnight. In certain terms of we've got 3 minutes till this Aussie data comes out. So what have we got on the docket today? So we've got Aussie data coming out here, looking like a little bit of a tick up. Building approvals, it looks like it's sort of bouncing back here a little bit. It was shocking last month. A little bit of a tick up with the retail sales and that. Look, I don't know how much of impact it's going to have. I mean, Aussie is really, seems to be well aware that they're going to be cutting multiple times throughout the end of the year. I think 75 base point over three cuts. So, 25 base point cuts through to the end of the year, and Aussie's still punching up. But again, I think that's ultimately on overall US dollar like weakness, like right across the board. I can't see what necessarily Aussie is bringing to the table. I suppose commodity prices are very high, so I guess that does sort of help it out with it all. But if you look at the chart, it's just a grind. It's no real full commitment, and this is what makes me cautious about longs with Aussie. Even though it took so long, it was 8 weeks to get above that sort of 65 and hold above 65. It's no sort of full commitment with it. So we'll see how we go in that. I mean, look, it's holding up there. It's just under 65.80 at the moment. So we'll see how that sort of pans out. Anyway, moving on, we got a little bit of Euro data, nothing too exciting. So ADP, so incredibly weak last month, and so this is actually looking like a positive direction move for them here. And if we have a look at what the previous sort of ones are, it's been pretty weak, getting weaker, super weak. Forecasts always around this sort of 100. Even the forecasts have been dropping down a little bit here. But if you can pump back into a 90, that's a positive. I mean, that's the highest you've seen since the start of April. And all in all, it's yeah, I mean, look at these numbers that we used to be sort of pumping out, 190s, 150s, 120s, these kind of things, 233. You can see how it's dwindling down, and you can see how people would be questioning the labour market, and obviously with that, they're sort of cutting, getting ready for the cut and that sort of idea. I'm just going to go watch this data, just going through here, back in 2 secs. All right, so just had that data come out there. Nothing too exciting, really. Kind of a little bit of a miss on both of these here with the Aussie. So it's again, it's one of these sort of ones where it's a little bit of what I call grey area kind of data. So basically, it's improved from what it was, but not as much as they expected. So you know what I mean? Like it's positive, but was the market fully pricing for this thing? Well, in theory, that's kind of what the market's expecting. So expect a sort of little bit of push on with this. Didn't quite do that. You'd peel back to whatever the equation would work out to, getting a little bit into it all, of where Aussie would be with that. So you'd expect a little bit of a cooling off from this kind of thing. And I think we've seen, I mean, pretty much non-event in that. I mean, Aussie dropped 3 points or something. Building approvals, again, same sort of thing. Like it's improved from what it was last month, but not as much as they thought it had been. So, overestimating a little bit of what data was going to sort of be coming out here, and it's kind of fallen a little bit short. Cool. So I will get onto the charts in 2 secs. We got ADP, as I said, yeah, that's sort of looking to sort of tick up. And look, I mean, if you just look at those two numbers side by side, it's like, wow, that's a bit of a jump up, so almost 200%. But yeah, thereabouts. But yeah, again, look, it's just bringing it back into line of kind of what we've had a little bit more previously. Um, Through the rest of the session, that's about all of note for it all. So yeah, so again, little bits and pieces, but ADP, it's going to be an important one. If you come in at 99, I think it's going to be a positive. And I think if you come out with a lower number, as I said, I think the market's very happy to sell US dollar on any kind of little miss. And last night was the first time that we actually saw a reaction to data that didn't get sold into like within 2 minutes. So yeah, it's interesting to see. But in that, we'll jump onto the charts. Um, so interesting sort of thing I'm finding with DXY here. It's almost sort of shoring up this little channel that I popped in the other day. It's coming right down to this little point down over here. We got an even smaller little channel here. This was the one that was originally, I think I had done like a wedge like this. Obviously, as I said yesterday with that thing, you see a wedge, and the same thing will apply with this as well. That if this moves out here, you want to see an explosive move out. If you dribble out to the side of these things, oh wait, where's that? That's the kind of what you expect. So you want to see, okay, yep, bang, bang, and explosion up. If you dribble to the side, most likely the market's not looking at this and it's just going to dribble down. And so now we've sort of moved it back out, got ourselves a little bit of a sort of channel. And so if we sort of get into sort of how it actually reacted from that data last night, this is where the data came out, right down off the lows here. We saw it actually sort of move up, and as I said, this is the first time, although yes, okay, it did succumb to it afterwards and got sold down. Excuse me. But typically what we have been seeing recently is a bit of a data pushes up, and then 2 seconds later, bang, pushes back down. So if I can find, no, I can't find something direct off it all. Like these kind of candles here, as you can see, it's a bit of a bullish candle off a low, and then bang, sold straight down into this candle just here as well. Moves up a little bit, bang, sold back down into. Anyway, look, long story short is it kind of held it vaguely. But this falling resistance, this little horizontal, that seems to have played its part, and market's still very cautious to be sort of doing anything substantial with US dollar. Like as you can see, pretty much from the technicals for a while, it has just been pummeled into. It hasn't shown, so at least through this period here. Here at least it like 3 touches to the bottom, and it kind of moved up a little bit. That was that big rejection. This was that big sort of breakout level that I was saying the other week, above 99.4. Then watch out for the shorts. Got to 99.4, and it's just been absolutely pulverized since. I mean, if we look from that 99.4, it's lost 3% in what the first in like a week. Like that was just absolutely ridiculous. Like as I said, that was the big level I've been touting for quite a while, 99.4, and it sort of was coming up, and just poetically bad. Anyway, point is, okay, so now it's come down the bottom. We found a little bit of a base here, a little bit of what could be maybe a larger channel. So let's get rid of these. And what these ones are set up for. Nice color though. So we do have a little bit of a channel, only two touches on the bottom here, but enough to sort of say that, okay, this is obviously sort of a lower side that they do seem to be respecting quite well, which means that, should we get a little bit of a push, you can expect that most likely this white line's obviously going to sort of play its part. Should it get up there? I mean, look, we're miles off there for now. But you got to consider these things. And as I said, like, when you sort of think, okay, what are the Fed trying to do? Okay, this is what they're trying to do. What are they going to have to see to move towards, I guess, what their goal is, and their goal would be potentially to, not raise rates too preemptively, sorry, not cut rates too preemptively, and then exacerbate inflation. And one of the main things, as I keep saying, with that is the jobs and the jobs, like because that's the other side of the coin that they're trying to sort of balance. So, if you get strong numbers, it's going to bolster these things with the idea. And that's when we use our little targets. So obviously gap closures, the top of the channel, these kind of things. But first things first, let's get out of this little channel that it seems to be in, because obviously, as you can see, it seems to be respecting this quite well. It's almost between the two of them, making it into a little point down the bottom over here as well. The fact that it did have some kind of data, as I said, with these sort of things, it's not like not su the data was pretty good actually. Like it wasn't too bad, but it just sort of meant that it's sort of like there wasn't an excuse to just completely dump it down a whole nother level down down to the bottom side there. But what we're sort of seeing at the moment is obviously if you can get above yesterday's highs, which this is a little bit of a horizontal here, as you can see, it was sort of holding. I think it was coming into Europe yesterday. If you can get above yesterday's highs, where it pushed up and tried to come out of this channel, then you could probably expect maybe we could see a little bit of a dribble up a little bit higher over here. Just looking at a couple other things at the moment, gold had an incredible run the last two sessions. But if that starts to come off a little bit, maybe we could see this dribble up here a little bit. But since they've knocked it down from 99.4, that's what I was saying before, they haven't shown one bit of bullish price action at all. There's no attempt. I mean, couldn't even close the gaps that it had coming down, let alone put in new highs, except for maybe this little sort of snippet here that obviously got smacked straight on the nose. But this is just complete straight meltdown sort of status. So I think sort of like if you can get out of this channel above that previous high, look, you're going to run into this bottom side of the support pretty quickly, so they're probably just going to slap it down from there as well. But that'd be the first time in at least a week that we've actually seen some sort of, even if it's short-term potential bullish price action. So I think that could be something worth noting on, because this has just been straight, as you can see, lower highs, lower lows, dribble along, lower lows. Oh, this is coming into end of quarter, end of half year, yada yada. But this is just sell it at all costs. And this is what I mean, sort of like, when the sort of technicals get to this point where there's no sort of like, there's no trickery, there's no like, hey, let's get them in and trap them and then sell it down. Let's sort of fake it up and then trap it. No, it's all just get out, get out, get out. Oh, look, it's got a little bit back. I don't care. It's going lower. Get out. Going up here. Get out. Like, that's just emotional trading, in my opinion. So I think sort of like, yeah, this is probably a level that I'd like to see it above. So let's just put a little load of here. Let's call it short-term bounce, because I don't know if it's really going to going too high. But that would be something. The first time you've seen any sort of remotely bullish price action in the last week to get out of this sort of channel. And then, you can move up here. Once you're moving up, you're looking back up, obviously, into this little range, closing gaps, these kind of things. We'll do that when we get to that. Maybe I'll do a separate video if we can even just put in a new high here. Obviously, sort of with this thing, it's not looking like it's thumping in the immediate anyway. But anyway, that's topside move there. Look, there's always the possibility they just go, yep, that was enough for us now, and then they knock it back down. With the fact that you got ADP coming up tonight, the fact that it's expected to be a little bit better than it was previously, back up into the low end of what you could almost sort of call a bit of the average. Like, I mean, it was 150 for a while and that, but it's been dribbling down for a bit. So if they can get it back up above 100, that'll be seen as a little bit of a positive. So you might see a little bit of, not necessarily like you're going to be buying it up on that, but you may not be selling it based on that because if the numbers do come in positive, like I said, that's going to have a sort of a fairly sort of it's going to give a reason to sort of not sell the US dollar. You don't want to be shorting this thing down here and then get trapped into this level down the bottom. All right, so yeah, what are we looking above 99? Look, call it 97, just a round number. Above 97, you might see a little bit of a push. Look, 97, 97.40 would be probably like where we've seen these sellers previously over here. Where's that little arrow's gone? So these little ones down over here, I think this would probably be should you get here. I don't know if this one here will necessarily hold. Like obviously it's a little bit of a range in theory. It should, but people have just been selling this thing regardless anyway. Like I don't know if they're waiting. Hey, let me get back to, and this is my point as well that it all builds on it with the typical structure of things. You get people trying to buy the support. It didn't get out, comes up, they get a chance to get out for zero. They're not even waiting for that. Say you tried to buy support here and then you tried to buy support here, you failed. Well, you haven't even had a chance to get out for even, and people have just taken it. Bang, 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 bang. So I don't know how much this one will necessarily hold, but I think definitely if you do push up 97.4, that'd be the target that I'd be looking for to sort of see how the market reacts to this move here. And then, of course, we've got NFP coming in tomorrow. Move along, we'll do gold because gold absolutely ripped back up, which, as you can see, look at this, came right back in contact with that top end of what we have for that weekly. Where's the weekly one that I had on here? Monthly, weekly, yeah. Not that chart. This one here. So yeah, look at where it came right up to. This is that little range that I was sort of calling sort of with this is on weekly. So we had the breakout on the weekly, failed breakout, came back in, slammed down, found support pretty much exactly where we sort of thought it would, and now it's bounced back up. And so really, this little purple area here is the kind of range that was back in. This is what's going to be vital here because in theory, you've got your failed breakout back into the range. I mean, it doesn't mean it's going to necessarily melt straight down to the other side, but certainly there was a good reason to sort of smack this thing on the nose here. But this bounce back has just been incredibly strong. Like I did $100 in like 2 sessions, which is up until 3 months ago or 2 months ago, whenever we had that incredible sort of bull run from around this period here. So say from March, that would have been unheard of. $100 in 2 sessions. Like I always reference this big move we had. Where was it? I think it might have been this one here. Yeah, and we did like $75 in 15 minutes. That was just mayhem, capitulation, bang, 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 bang. Like spreads were going out to $5. Like it was huge. But that was like that was $75. Like this thing, okay, yeah, $100 in 2 sessions, and that's not quite the same as that. But ever since here, we've sort of been sort of blown away a little bit, and sort of go like it's we've been seeing $100 in a couple of hours kind of thing through these periods over here. So you know what I mean. It's certainly a change of the landscape in the what's acceptable for sort of price action movement. But it is still a big move. And if we look at the bounce back up off here, so jumping back and forth between all these charts, so I call this one the lower time frame. This is the chart that I sort of put up yesterday, and just to sort of recap this sort of thing. Look, structurally, it's worked beautifully, coming all the way down through here. It actually had this. I moved this originally because originally my price target was like this. But of course, with these flags, take it from there, and if you take it just from that very big tip up there, that actually filled perfectly. But regardless, came down, hit that price target, and bounced straight back up. It did look for a second like it was going to come into this area here, and bang, because it got a $20 drop off from here, so 97.74, yeah, so $20 drop off down here. But as soon as that let go, a second effort back up through there, because this is what I was thinking, back up here and then bang, continue down. They obviously sort of see people sort of looking for this kind of sort of stuff, and they think, you know what, let's just throw it up another $100, because where would you put your stop if you're kind of doing your textbook sort of stops above here? Well, you probably put it above this high over here, which is where to come up to. Took out that high, and starts to sort of sell down here a little bit as well. So, this was the kind of zone that I was looking at. It was a bit of a confluence. You had the 50% retracement of this big drop down. And this is what I mean with this kind of move. Like, it is quite a big move because this took, 2 weeks or something, and then within 2 sessions, you're hitting the 50% retracement. I always feel like this 50% feels smaller than this 50%, but it flew back up here yesterday, and that was just a straight like turn the buy switch on, and came up over here. So look, it came up, a couple of bucks higher than sort of I would say. I think it was around sort of 15 or 16 bucks or something yesterday. I'm like, look, it's going to come up a bit higher, and this is the area I was expecting the reaction, and so now it puts us into this sort of kind of questionable area, because normally with your structure, with this sort of stuff, what we're kind of looking for is the same sort of thing. Down support, find resistance at a previous support level, attack the low, make a new low. This should have done this. Well, should have done this. I mean, it does whatever it wants to do. But, in a perfect sort of sell down scenario, it should have come up and sort of maybe found resistance here. At worst, probably about resistance about here, because, finds resistance at previous supports. It's shot up a little bit higher and actually it's come out the top here, come out the top. So this is a little sort of like a potential for a bit of a sort of just a let's stop everybody else out and then move it back down like this, a higher kind of sort of move back up. Because if people are trailing their stops and they're sort of short all the way and just holding these whole things along here, that's the textbook area that you say you put your stop or put it just above the previous highs. I mean, look, that gives you $100 swing. You're probably feeling pretty comfortable, pretty safe with yourself. And bang, okay, well, you're out. Now we can get on with the show and start moving it back down. And this is the thing. If US dollar does catch a bid, this is realistically what we're doing. We're back targeting this level down here, 32.40s. I mean, there's these other levels that we've got to get through here. 33.10 again, 33.100, like these sort of big round numbers. But in theory, that's the kind of move that we're potentially looking for, which then could even lead to a bigger move to the downside here. Now, that's the sort of bear case kind of scenario with it. Now, the bullish sort of case scenario of this is one, it just goes it, and then does another little leg up over here. As I said, if we see a little bit of a push on US dollar, I'm probably not thinking that. But what I am sort of thinking of a bullish case potential scenario, I can find where I put this little drawing thing, would be this, which would be your inverted head and shoulders. This is what I was saying yesterday, that this kind of lines up pretty well should this want to move, and the price target for this is up around this sort of 34, 34.10, 34.15 kind of area, and that is a possibility, because we know that sort of like this is a big support area. We've got it marked out here. It's held, it's come down, it's trapped, comes up here, moves back down here. Maybe US dollar gets a little bit of a push up and sort of tests to close a couple of those gaps. As it does, gold comes down here, US dollar gets smashed again, gold resumes its upside move. So I'm in a bit of a two camp kind of thing here. I do think we have probably some, at least for this session, some downside coming. If we go above 33.60, then we're looking back up, test 34s kind of thing back up over here. But I would say just structurally, you're in this sort of two sort of camp thing here. Let me just, how can I make this a little bit not so bright? Zoom it like this, whatever. It doesn't sort of overshadow everything. So yeah, you're either sort of going to be come back down here. So and this is what I was saying yesterday, these are the kind of levels that I'm interested in to sort of see what the buyers do. Because this is just based off where we've seen them previously. We saw them try to hold this level over here. We saw them try to hold this level, over here. Now that they've sort of got back above it, are these buyers going to sort of step back and be like, yep, cool, I've got another shot, let's rip this up a little bit more. So downside to say, 33.10, 32.90s, these kind of areas here. I think if you go under 32.90, then we're going to be targeting the lows. Yeah, underneath that sort of 32.85. I think if you can get down there, that means buyers haven't stepped in, buyers haven't stepped in. Really, you're targeting these lows down over here, and this is the bigger move, and we can just say that this was just a little bit of a fake out to drive it lower. And you got to think, what in what scenario do the powers to be these sort of things? I know so some people think that's like, oh, you think there's somebody. Of course, there's people pushing these markets around. That's why you get fake outs. Um, why would you come up here and hit stops? Should you get back, this is in the scenario that we get back down over here. Why would you come up here and would you hit the stops? Well, you do it because people are trailing the stops down here, down here, down here, down here, down here. You take them out because you're going to take it a bunch lower. That's the point. Maybe you drag in some longs because people are like, hey, we've gone up over the top over here, and use that to fuel a move down to the downside. Maybe somebody's looking at this going, hey, look, it's come through this falling resistance. It's taken out this previous high. That fits my my sort of quota for my sort of entry level position. So what do I think? Well, let's get long. It's going back up. Where would I put my stops? Oh, well, maybe I put my stops down under here. Where would I put my stops? Maybe I put them down under here. And these things can be used to fuel the next move down, if that makes sense. So, that's the kind of sort of mentality I think I'd be looking at. Should we get back down over here, that this could potentially just be a fake out. If it's a fake out and it's a confirmed fake out, then I think, you could be pushing, opening up to a move a bit lower. And, what would be the scenario of that? Well, that would be US dollar running a little bit. Speaking of which, if we just flick back across to this, we can see, DXY bang, catching a bid. I mean, it's still early days, but, it's the first time we've actually seen it open up and carry a bid. So let's get back onto what we're talking about, gold here. So yeah, I think sort of for me, I want to sort of see what happens around these areas here. I want to see, are they going to come in? Because that could potentially be your inverted head and shoulders. Or if they take out 32.85, then look to see the test / continuation through this zone down here, and we can look for our larger price targets down here. Because remember, we do have that sort of failed breakout, on the weekly time frame. So nothing's confirmed till it comes out the bottom side of that, but it does put it on caution. Put it that way. All right, move along. We got Aussie, and Aussie's starting to get. I mean, hardly got it sort of hit, but it's still consolidating the highs up over here. Aussie. I mean, look at how many lines and just bits of crap we got going on around here. Very, very scrappy chart. I mean, the price action has just been, and this is okay. So to unpack Aussie a little bit more, it's look. Obviously, if you take it as a straight, okay, look at the left side of the chart. Look, I was thinking about this yesterday. Look at the left side of the chart. Look at the right side of the chart. Well, what way is it moving? Well, it's moving this way. Okay, yep, okay, it's bullish. And yes, I mean, had you bought dips anywhere along here, yeah, I mean, you're laughing. It's worked time and time and time again. But as I said, if you sit down and you weigh it up and you go, okay, well, what's happening? Potential for 375 base point cuts. 325 base point cuts. So 75 base point in total cuts against what the US is doing. And the US is questionable about one towards the end of the year. Based on that, it should not. And so you can actually sort of, with the Aussie, you can look at this other chart here, which is a nice one. It's a bit of a hit miss ratio in that, but this one is you can only do it on the daily, well, the thing here. But this is the yield spread, the 10-year yield spread between Aussie minus the US 10-year yield spread. And if you can see, I've marked it out a little bit here. And it very much sits in this big band. I mean, this is going back to October 22 here. And these last couple of big runs, we can see, I've sort of marked out where's Aussie been at this date, where's Aussie been at this date, so on and so on. And through this whole period, how far has it moved? And as you can see, whenever we get up to the top side of this band and it starts to give way, we've lost 7.4% from here before we started to turn around. We gained 9% through here. so on and so on. So look, in theory, we're down the bottom here. It's tried to get up a couple of times. You know, should in theory kind of be moving arrows again, moving in this direction here, which would mean that you're coming off the lows, which means you could be looking for some sort of positive gain. So in that sort of respect, in that you could go, yeah, okay, look, Aussie could be seeing some sort of further buying, and this is the thing that this is why I'm sort of saying that I'd like to be long Aussie through majority through the second half of the year. But I'm just looking for that one sort of ugly shakeout. We got a shakeout the other day for 100 points or something like this, but the bounce back obviously was 200 points. So, kind of, it takes the shine off it. But what I'm kind of looking for is potentially, where we go with these little things here, a move back down under these levels over here, and then a move up over here. That's ideally what I'd be looking for. And I think if we can get down to these zones that we've seen here previously, into this like little area down over here, I'd feel a little bit more confident. As you can see, a couple of times here, we break up, big move up, move back down. So it is possible to sort of see it. I mean, obviously, it's a bit more of a sort of, okay, planning ahead kind of thing. But yeah, should we see a run with the US dollar, even if it is just a bit of a squeeze, if they sort of say, hey, look, if they don't cut in July, well, hold on, wait, it's July now, isn't it? So if they don't cut this month is it? I think, yeah, I think July, and then they don't have one in August, and they have one in September. Um, you could see a pushback down here because at the end of the day, these yield spreads are exactly that. It's the 10-year yield. And if you're not looking to cut, well, that your yield's going to be a bit higher. If Aussie are looking to cut, well, that should, in theory, push it back down. So that's my ideal trade for the second half of the year, is to get a larger sort of squeeze on US dollar, shake out Aussie, get Aussie back down to, wherever it was, maybe 62s or something now, and then sort of get long for the remainder of the year of 2025. Forget what year we're in. Anyway, so back to Aussie, what we're doing now for our here. So despite all this incredible choppiness, this big V-shaped thing up at the top over here, I said this the other day, though, these kind of big shakeout things like this, it's very oil-esque in the sense that this is the kind of stuff you sort of see them do. They sort of drag in a whole bunch of people like, yeah, we got short, then jam it right up, stop them all out. And then once people are sort of burnt out mentally and financially, then you may see the move. So that's a sort of a bear case kind of scenario with it. But I think that is only available under 65 cents, because the thing is, it worked so hard. Where's the Aussie chart? Yeah, it worked so hard to get above this band through here, this 65.50 area. And I'm using 65, not 65.50 as the kind of confirmation zone, because if you look on the weekly, how many times it got above 65? There's 1, 2, 3. Let's go up here. More or less called 65. 1, 2, 3, 4, 5, 6, 7. 7 weeks testing above 65 cents without unable to close above there. Then we put in this absolute monster rocker of a week, gets the close up above 65, and boom, as you can see, continuation follow on. But if you get back down underneath 65, so if you fail to sort of close up above here again, then it's kind of like okay, we've tried. We've really tried here, gave the close up here. This is every opportunity for Aussie to go higher. This is the time. If it's going to do it, it needs to continue this move here. It's very overbought. We can say it's been overbought for quite a while, but it's very overbought on this weekly chart. It needs to produce this week. So if it fails this week, and particularly if it closes the week under 65, I think that could be opening up to more sort of downside with Aussie. But as it is at the moment, you can see it's obviously chugging along. There's a massive engulfing, and it did sort of continue a little bit on, obviously sort of on the start of the week there as well. But again, cautious on what US dollar does, because if they get a squeeze on that, Aussie, as I said, the whole point I'm rabbiting on about the sort of the rates and all this kind of stuff is because fundamentally Aussie isn't sort of, oh my God, it's a great sort of thing. They got high rates. Let's sort of stick with them. They've got a very hawkish central bank. they're the opposite to that. They have a very dovish central bank and they're trying to cut at the moment. So on that basis, it shouldn't be moving up so much. But of course, it's not just one thing that drives these things. And this is what I've been saying for weeks, the overall weakness of US dollar is what's been driving Aussie, in my opinion. And this is why you've got this kind of chart that's very up and down, up and down, up and down, up and down, because there's no reason necessarily fundamentally to be buying Aussie. Yeah, you got the commodities and they're kind of strong, and I'll give it that's actually sort of doing it. But you know, it's sort of moving up, but it's very cautiously moving up. And why is that? Because fundamentally, I don't think it has the backing to be up, and it should be higher. I mean, look, if it was, as I said, the other scenario, sort of like a hawkish central bank, Aussie should be at 68, 69 cents, but they're not. They're struggling to get over 65. And this is why I sort of think that should the tables turn and you see US dollar pushing up and they remain a little bit more hawkish on their side, so then you've got a hawkish Fed against a dovish RBA, I think Aussie's going to be very susceptible. And I think it's going to be sort of moving down here. But if you look at the straight technicals, it took a hell of a long time to get up above here. It's finally broken through. It's back tested. It needs to hold up around this zone here. And as for the moment, it is consolidating this little high up here. Little triangle out the top. As I said before, you just need to see continuation. You need to see this thing really get above 66 this week because it's done so much work to get up here. Now it's here. What do they do with it? Do they just let it fail back down, or do they sort of go? Do they run with that? So I think this week's going to be very important. And obviously, the big things are going to be, or the main thing's going to be NFP. ADP is a little bit, but NFP is going to be the big sort of driver with it all. So yeah, for the time being, look, it needs to stay above 55.50, which was that little low we put in yesterday, which you can see is pretty much a perfect back test. Below 50.50, looking back into the 20s to sort of hold this zone through here. And then sort of if you get back down underneath these 20s, I mean, it's a pretty straight shot to testing the round number. So they're the two sort of downside levels that I'm looking at here. Find a circuit put here. So this little zone here, and then obviously this little zone just here. I think if you sort of get down underneath, certainly if you get down underneath 20, I'd be cautious on the longs because it just feels like a bit of a, it's tried to break out and it's just failed. There you go like that. As you can see, if it's 1, 2, 3, kind of 4 with that, it's kind of breaking through here. As I said, underneath 50, 55, 50, I think you got a 30 point move down to test these, test the resolve of these buyers down here. Underneath there, you're looking for the main number, and as I said, that's where you want to make sure that for as a weekly, it can hold this zone here. All right, let's flip along. We've got silver, and it's still grinding sideways, I see, but this falling resistance seems to be kind of playing its part. Probably almost fine tune it a little bit. Nah, let's just leave it where it was. That's fine. Again, look, it's coming to a very crucial kind of level here. I said yesterday above 36.80, below 35.30, whatever, 35, yeah, 35.30, call it that. They're the two levels that I'm expecting the break from. The little arrow's gone. That's the kind of move. I am sort of feeling that you are probably going to get a little bit of a move down. Again, this is all predicated on the idea that US dollar runs, which is a very contrarian kind of view to absolutely everything at the moment. But we'll see how we go. If we have a look at this last little push up here, though, I mean, look at the RSI. This is on the 4 hour. I mean, that was a big push up, hit the falling resistance. It really didn't do much. Like, you know what I mean? It wasn't warranted to be up here. It almost got back up to the highs. The RSI was like barely over sort of 50. So it was obviously a fairly weak little drive up to the top. And as you can see, as much push straight back down. And this, I think that's a good representation of how you can use this. This is the stochastic RSI, which is slightly different to your normal, just typical RSI. It's a little bit sort of faster moving, but you can see that sort of like obviously sort of the buying pressure that got this to these, 3680s, as we were getting back up here. I mean, it got up to 3660. That buying pressure was just not there. It didn't deserve to be up at that level here. It's hit a technical level, the falling resistance, and obviously bang back down and into this little band where we sort of found it find support time and time again. But I think certainly, you're getting close. This little triangle, I'd be surprised if this thing just dribbles out through all this. I think it's gonna either get slapped down here. I think this was its last little ditch fake effort up. I think we're moving to the bottom side. This RSI would make me cautious about making any highs here. Unless this can sort of like come back here and then sort of fire up here, and as I said, take out that 3680, I think this is going to resolve to the downside. Copper, similar sort of thing here. I mean, look at this. It was consolidating, big explosion to the top. Was it warranted? Well, the RSI doesn't really sort of seem to show that it was, and it got slapped on the nose. And this is, resistance, breakout, failed breakout, bang down here. I think sort of like, look, kind of you'd probably be under here. Like, give yourself a little bit of a leeway here, but this little support here, I think, is where they could be going. I mean, you got a little band in here as well, so these kind of levels through here. But certainly, if you break through, 502, I think that'll be a little bit of a failed breakout, and we could see it back down 495s. And these kind of things that if you kind of see these things potentially, because you know what I mean. Obviously, nothing's happened yet. Potentially a fail on silver, potentially a fail on copper. Gold to cool off here a little bit more, and it makes you sort of think that maybe Aussie, if again, sort of when I was going back to Aussie, what was holding Aussie up? Well, it's not the sort of rates and that. Maybe it's the commodities. I mean, the risk sentiment with equities is just retarded. Like it does, they don't know how to use any other button other than buy on equities. But should those things fall, should you see a little bit of a cooling off now that we're into the second half of the year, and we see a little bit of a cooling off in equities, even if it's a couple of percent pullback, and if you see these sort of these incredibly bullish moves with metals, with silver and with copper, and if we see those start to fail a bit, well, they're the two pillars that are holding up Aussie at the moment, like the commodities and the risk on sentiment, and the commodities and the risk on sentiment with the equities, because it's not holding itself up on a fundamental basis. So this is why I'm sort of alerting at these sort of things here. I'll put a little, in saying that, I'll say little supports here. Just some low supports there. But certainly, I think if you did break that level, we could be sort of looking for a little bit more of a move down here. The fact that it's come out of this channel and this just mainly this rejection here with this RSI makes me think, look, that smack back down is very warranted. But of course, you need that confirmation. Failed breakout. Failed breakouts are as good as a breakout, just in the opposite direction. Cool. And finally, we just do China. And this is the one I've been harping on about. I mean, this is a grinder at the best of times, but it is this wedge. And the wedge is starting to sort of firm up a fair bit. Like you've got quite a few good contacts down here coming off a horizontal support. We know where we're sort of going to be sort of thinking, okay, there are two confirmation lines. Firstly, out of the wedge. Secondly, above these swing highs. But I think that's your kind of move here. If you do get above there, if you get above sort of 720, I think that's going to be the time that you get a little bit of a push up on it. I mean, look, I've been saying this for ages. And obviously, it's just been dribbling in the opposite direction. But as I said, that's the kind of thing you sort of think at the moment. Potentially, this thing keeps moving down. This RSI was looking okay for a bit here, but we have still, if we take the extreme lows down here, it's still unable to get down underneath 20 for a low here. And so if we do see this push back up here, this will be our first alert, 718. to potentially see a bit more confirmation above 720. Work to be done, but should all these things sort of play out together, I think that could sort of come back into a little cross chart confluence. All right, that's it from me.